My name is Luis Gonzalez, and today I'll be discussing private placement offerings, memorandums, term sheets, and due diligence. A private placement offering can be described as a private alternative to issuing or selling a publicly offered security as a means to raising capital. In a private placement, both the offering and the sale of debt or equity securities are made between a business or issuer and a select number of investors. Companies, both public and private, issue in a private placement market for a variety of reasons, including a desire to access long-term fixed rate capital, diversifying financing sources, add additional financing capacity beyond existing investors. Since private placements are offered only to a limited pool of accredited investors, they are exempt from registering with the Securities and Exchange Commission, better known as the SEC. This allows the issuer to avoid certain costs associated with public offering, as well as allowing for more flexibility regarding structure of terms. Of course, there's advantages and disadvantages. Private placement offerings present advantages for long term, as private placement provides longer maturities than typical bank financing at a fixed interest rate. Private placement also helps diversify a company's source of capital and capital structure. Private placement enables privately held middle market companies and public companies to access capital just as they would with an underwritten public debt offering, but without certain requirements such as ratings, registrations, or a minimum size. The disadvantage of a private placement offering is that the buyers can be much more demanding. Buyers of the private placement demand higher returns than they can get in the open markets. The additional risk is not having a credit rating can impact a private placement buyer because they may not want to purchase a bond if it is not secure by a specific collateral. Private placement memorandum. A privacy placement memorandum is a vitally important legal document that discloses the objective risk and terms of the proposed investment in the company. The memorandum is usually distributed to potential investors whenever the company sells a stock or another type of security in the private placement. A memorandum is only distributed to a limited number of pre-screened investors to solicit offers to purchase stock or other securities as described in the PPM. The importance of private placement memorandum is to be in guidance with securities laws, as these laws prohibit companies issuing the offer from making false or misleading statements to investors when selling its securities, regardless of whether public relations registration of the offer is required. Term sheets. Term sheets is a non-binding agreement set forth the basic terms and conditions under which an investment will be made. It serves as a template to develop more detailed legal binding documents. A term sheet is generally broken down into 4 sections that include funding, corporate governance, liquidation, and other legal terms, valuation of a company, amount of investment, the percentage stake sought, voting rights, liquidation preferences, anti-dilutive provisions, and investor commitment are some of the key terms. It should be spelled out in the term sheet. Due diligence. When it comes to private placement offerings memorandum, due diligence is highly important, as due diligence for a private placement is the process for investors who are involved in the transaction can evaluate the potential of investment and analyze and verify information given by the user. The theory behind due diligence holds that performing this type of investigation contributes significantly to informed decision making by enhancing the amount of quality of information available to decision makers and by ensuring that the information is systematically used to deliberate on the decision at hand and at its cost, benefits, and risk. Private placement transactions can be very beneficial and save a lot of time and money when it comes to companies. These offerings also allow investors to yield higher returns on their investments. Thank you.